we're going to be preaching and the type of trades that we're going to be doing is not just calls and puts, but we're going to be doing call debit spreads. And what would you say? Is it a put debit spread, or is it still called a call debit spread?
Right. So
it's
there's called debit spreads, which essentially other people refer to them as bull call spreads. So it's kind of interchangeable terms, call debit, bull call spreads. Essentially, when you buy a call and the money, and then you sell it out of the money call, and you collect the premium.
So what's the put side called? It's just the same thing?
It's called put credit.
Put credit, okay.
Yeah.
So explain.
So call debit, put credit.
So explain that, like, break that down. Like, if I'm going to buy a call, then I'm selling another one. So, like, what am I doing exactly?
For example,
what's the benefit and what's the cons?
The benefit of the call debit spread is that you get into a position at a discounted price, right? So, for example, let's say you're buying $20 calls on XYZ company, right? And let's say the $20 calls are going for $4, right? And you can get them for $4, right? And for every $4 that it goes up, you double up your money, right? So let's say...
wait, break that down. So it's a $4 gap, so... Like, explain it, just so, like, because I'm, like, a little familiar, but I know somebody probably hearing that is like, what does that mean exactly?
Okay, so if you're purchasing a $20 call of XYZ company and the call price is $4, that means your break-even price is $24.
Okay.
So for every $4 that you go up because you invested $4, you'll make 100%. So if the stock goes from 24 to 28, you'll make 100%, right? But you're buying the call contract for $4. Now, let's dial it back a little bit. Let's say the $20 call is $4. Now you have a $30 call that is $2, right? Those out of the money calls sometimes are still pricey during high volatility seasons, right? What you can essentially do is you can buy the $20 call for $4 and you can sell the $30 call for $2. And you can get a $10 spread. The $30 call minus the $20 call is a $10 spread. You can get in there for $2. Now, if the stock goes up to $28, instead of you just doubling up your money, since you bought the $20 and sold the $30, you'll make 300% on your money because you pay $2 to get in. So it's 22, 24, 26, 28. So that's a 300% return instead of getting 100% return.
Now, with the regular, if you would have just bought the $20 call now, you would have made more money, correct? If you would have just bought that, like, you wouldn't have did the call debit. You wouldn't have did, like, you would have probably made more.
No, Steve, you're confused. I just explained it. Like, you're going to make less money.
No, I'm saying if you would have did it the other way, that's what I'm saying. That's all I'm saying.
Well, if you're just buying naked calls.
Yeah, you would have made more. So that's like.
No. If you buy naked calls, you're going to make less money. Like, you're going to make less money when you buy naked calls. Like, when you buy call debit spreads, you're going to make more money.
Oh, all right.
Yeah, like, if you buy naked, you're not going to make as much money as you would with a call debit spread. Like, you know that. Like, call debit spreads, you'll make more money. More money, less risk, lower entry. Naked calls, more risk, higher premiums. So when people learn about call debit spreads, a lot of times there's a lot of people who trade options and they have no idea about call debit spreads. Like, they don't know anything about the functionality of it or anything.
Yeah, I'm still kind of new too. That's why it's like I don't know as much either.
Yeah, like, don't confuse yourself.
Yeah.
Naked calls, you make less money. Call debit spreads, you make more money. Smaller entry, cheaper prices.
So there's no benefits of regular calls. There's zero benefits.
I'm not saying that. Everything varies. Everything varies. But you're going to make more money on call debit spreads unless there's a massive explosion in the stock. Which, let's say if the stock explodes to 32, right? From 20 to 32, you're going to make 200% on the naked call, but you're going to make 400% on the call debit spread. So you're always going to make more money on the call debit spread unless the stock goes up 50, 60%. Right?
Yeah.
Because call debit spreads caps your gains. But it's like...
Well, that's why I said that like that, because I just realized that it capped your gains.
Yeah. No,
so
like, you sounded confused. That's why I'm like, what's going on, guy?
Look like you about to slap me over the table.
Yeah. Almost for a little bit. But yeah, so it's just one of those things. You know what I mean? Like, if you're going to focus, I would say learn call debit spreads. If you're buying naked calls right now, learn what call debit spreads are. They will change your life. That's how you really make money in these markets. Call debit spreads, aka bull call spreads. Learn that. If you can learn that online and you're already buying call options and trading call options and you're buying short terms, if you do that, it will change your life. Call debit spreads, aka bull call spreads. They're going to change your life immediately overnight.
Well, and how you made it sounds like very, simple, but there's a lot more that goes into it.
I mean, people are going to get a lot of cool things from the podcast, but call debit spreads will make you more money than naked calls, unless you are anticipating a massive run. But even then, if you are, then I will go out of the money and do some call debit spreads. You will always make more money with call debit spreads, aka bull call spreads. Always. No questions asked. Hands down. Always going to make it. A lot of people don't know how to do it. Most people don't know how to do it. Most people don't know how to trade options. So,
a lot of the people we see, like I notice, like a lot